January the 11th, 2026, early Sunday morning, 12:33 a.m. And keep in mind, your educational piece, your training is there. And now that you've got training in and you're ready to rock and roll with the methodology, your question is, okay, I want to move really, really fast because I know we're coming up on an alternative cryptocurrency bull run. And maybe saving your own money has been problematic and all those other things. And we want to, at this point, introduce breakoutprop.com, using someone else's money to trade. And you have to pay for an evaluation. And of course, you got the one-step program, and you have the account size that you can pay for. And of course, if you want to trade $5,000, it's going to cost you $60. But they have rules. If you don't know how to manage that $5,000 and you blow the account, you lose only your $60. And that's a good deal, because you're not supposed to take your rent money and your hard-earned money and risk. Right? Now, of course, many people are used to trading the Forex, and this is that style. You have to have management in place. So this is something you don't want to approach unless you know what you're doing based on the training information that we have already gone over for steps 1, 2, 3, 4, 5, and the 6 videos that are at High Cycle Top Trading, the YouTube channel. Now we're going to show you the methodology of making gains. So as you can see the criteria, and let's just go 10,000 since we get nice round numbers, like 1% of 10,000 is $100, right? And of course, you don't want to draw down $300 per day on 10,000. You'll blow the account. Okay. So that means whatever you're doing, you don't want to risk 10,000 on one trade. I mean, that's poor management. If you risk like 2,000 on one trade, that makes sense, because you won't blow the account, especially if you set your stop losses and so far. And so, all right. Max drawdown is $600. Okay, so you see the numbers. And if at any given time you average 6% max drawdown, then the $110 goes by. Now that's bye-bye. That's a little extreme for some people who have poor risk management. So maybe they want more of a guarantee to get used to the platform, because they do give you a terminal. Let's look at the 2-step, and you'll see the numbers change. 3 and 6, 3 and 6. Okay. And of course, for the 10,000 account, you have to pass their training in order to get the 90% of any future trades, right? And keep in mind, you still have to follow through the criteria of not having the 3% max daily loss, or having the maximum drawdown of $600. You blow the account, you lose the account. But I'd rather risk this and use someone else's money and have good risk management. I mean, that's a lot of money to play with. At the same time, it could be a lot of money to spend. But for me, I don't look at it as necessarily taking a risk. It's a skill. So if that is too extreme for you, then go to let's go through the pro as well. Okay, the pro. Remember, one evaluation boom, you have access to your account. The Pro, 3 and 5, right? And you got to make a little more, because if you don't know what you're doing, rightfully so, they took your money. Why? Because they're assuming all the risk, right? And the Turbo, 3 and 3. But if you know what you're doing, you make your $900 and you have access to your account to trade and gain up to 90% of the account. Now, that's a good deal, especially in an alternative cryptocurrency bull run if it comes when it comes. How easy is that going to be up or down, especially if you start talking bear markets and going up and down? So let's look at the two-step. And of course, the numbers are better as they assume more risk. But you have one goal here. You got to bring the account up to 10,500. And then with the second step, let's say, okay, you did that. You know how to use the terminal, the platform, you know what you're doing. You gotta do it again, except for you got to make double. So 11,500, then you have access to your account where you can trade and manage the max daily loss amounts and a more generous maximum drawdown, which is nice. And look at this if you know what you're doing. That's beautiful. And look at this if you know what you're doing. I mean, look at that. Look at that. All right. So when you set up your account and you buy an evaluation to gain access to someone else's money, you get your terminal. And the terminal is simple, nice, and straightforward. It's clean. And I made a mistake or two, but I learned how to use it. I mean, I should have watched some videos, but I load the videos on a platform by which me and my brother communicate. This is a really good video on YouTube. And it's a nice short one. And it's going to give you more key information on breakoutprop.com. All right. And remember my wash, rinse, and repeat setup. This holds true as I'm looking for those key signals. And since we get to buy and look at the price go up and make money off of that, we also can sell or short the market. We can long the market and short the market. This is a beautiful thing. A beautiful setup that I look for. And it gives me a high level of success. So when you want to short the market, you just look for the opposite. Instead of a golden cross, you're looking for the death cross of the 50 and the 200. Instead of the golden cross of the 13 and 48, you're going to look for the death cross. This channel here would be green, and this one would be red. And so the opposite would occur. We travel up through red, but down through green. So since this will be green, then we'll travel down through green, but up through red. So the reverse would be. All right. So that is nice to see. And keep in mind, for those of you who really watch the training videos, parts 1, 2, 3, 4, 5, 6 off of Pi Cycle Trading YouTube channel, and you have access to the software. If you didn't take your own notes, then of course these are some beautiful note cards that just make sense. And of course, if you wanted to pause the screen, that's on you. And this one here, like responses, what happens if you get it, right? What does it do? What are the effects? Okay, and the third note card, take a look at that. All right, so that's all, common sense based off of the notes. So the terminal, of course, simple and straightforward. And look at that Tradingview. I'm not going to click on it, but I have my Tradingview set up late in the background. So a good methodology is to build your chart in such a way that it makes sense. Now, we are on the 10-second chart. And of course, keep in mind there may be some internet lag. I am recording. There can be some hiccups. There could be some computer processing power problems, etc., etc. But one of the most simple ways of managing risk is to set alerts. And of course, you guys know how my system works. I get an alert and my phone will send me an email and give me a notification. My phone will email or give notification, and it will alarm or sound. Whenever it rings, I get a text message or I get a notification only from Tradingview, and I get no other, all other notifications, alerts are cut off unless it's like an Amber Alert or that type of thing. All right, so I'm drawn into the charts, but I can't be by the charts 24/7, but I know the computer can possibly look on my behalf. So if you look at the 10-second chart ZBCN, you notice we can set alerts on many of the things in the chart. And one of the good things to be able to set an alert on are your tags here. Now keep in mind, $10,000, 0.26% is $26. I'm not going to bet the whole 10. I'm just going to bet a part of it because of the drawdown. Now, I know what you're thinking. Keep in mind, we're on the 10-second chart, folks. And we said the 10,000 account just so the numbers are simple. Okay. When we're on other time frames, and before we go to another time frame, let's just see if we can set an alert with the little tag up here, the bull tag. All right, so add an alert. And we probably are in the bull. Let's see, can we set the bear before it comes? Bearish entry. Bearish. We're on the 10-second chart. Once per bar. All right, so we set that alert. Let's see if we get the alarm going if all is well. We know the blue tag is in, and we're going up. So when the yellow tag is in, the bear tag, maybe we'll get the alert if all goes well. If anything on the screen, maybe you'll hear an alarm in the background from the computer. Maybe you'll hear the phone go off. If we do get the alert, we just want to see if everything's working properly. Keep in mind, it is a fast-moving chart. I'm not quite sure if we will get such an alert. Okay, so I hear it. I see it. Okay. I know it's moving really fast and it's taking you down. There's visuals here. So now when that happens, I'm going to go into the terminal for bonk and I'm going to sell. And I'm going to choose the price point. Now, that's not bad. 943 is like saying almost 10%, right? Almost 10%. So the lot is the number of tokens to give you the price. If it was XRP, then I'd have to have at least 420 or so. Let's say roughly 420 to about equal that amount, right? About 500 roughly to equal about 1,000. Okay. So now we're going down. Now take profit. And let's just look at a price point, even though we know that the thrill is probably gone and this ride is over. We got that tag right there. And keep in mind, this is a fast moving chart, so it's an estimate. Going up. At measured to realistically, I think the price will go. Okay. And then based on that price point, I would come back over here. And let's say we go down to 1038. Let's just say 1038. Okay. And that's just an idea. And of course, you see the prices change as the price is probably now fluctuating. I'm going to cancel that because of that very low. I need to cut that alarm off because it's probably happening multiple times and I'm getting emails. I don't want to burn through my alerts on a 10-second chart. Thank you, but no thank you. Let's cancel that. Okay. So that draws your attention to the chart so that you're not constantly looking at chart, but you're trusting Tradingview to send you good signals. And now when you get the alert, when you finally get the alert, you're just not going to jump into the trade. You're going to do evaluations based on wash, rinse, and repeat cycles of what I showed you in Telegram. You're going to critically evaluate everything and see if it's worth taking the risk. Now, let's just say we're on a 20-minute chart. Let's look at a 20-minute chart where things start to make sense as far as movements. All right, and of course, you can see if things are bearish or bullish based on the table. You can see where the trend is without necessarily flipping through all of the various time frames. So you know things can ripple and affect through time. 15-minute chart, things were looking bullish. We can look at support and resistance. We can see where price points are. We can look at pi. Let's see if we get pi is probably all through the 11 minute time frame. Let's go here. Since I think I have the pi for the 3 to 11 minute time frame built across the bottom of the screen. Okay, so there's pi. Okay, there's pi. Beautiful pi. Pie is so delicious. Now I know you're probably looking at this, green and black are great entries. This color green, not lime. Lime is usually a bridge, or you can count cadence to see if you should exit the trade, because lime could be an introduction to black. But right now it was a bridge. You're probably looking at this right here. Oh, that was a good entry. Green, black, get in, ride it up. As far as the shade of orange, we know it's going up. And we got the tag here, bullish, and we got the tag here, bearish. And then that makes sense, but it doesn't appear to go up, but it does. Because number one, you have a wick here. Within 11 minutes, the price got down to here, but was brought back up. So when you see green like that for this particular time frame, then of course you do ride it up into orange, and then the price goes down because the 9 and the 21 death cross came in. Okay. If you wanted to trade pi or look at the signals for careful evaluation, because you see you are being brought down through the 111 and 700 based on the red squares. You just got temporary relief of the golden cross of the 13 and the 48. That triggered the golden cross of the 9 and the 21. Until your death cross of the 9 and the 21 came in. Because your 1 and the 3 triggered some downward priced action. Then it came in again after the blue and triggered the 2 and the 6 death cross. Boom. Okay. So let's take measurements since we're on a higher time frame. And let's say we're following pi and our phone gave us an alert because we were watching a movie and we're here. 1.74%. Okay. So you're thinking 1.74%, that's $174 of $10,000. But I'm not going to bet the whole thing because that's poor risk management. So I'll cut $174 in half, just logically speaking. Okay. It's about, looks like 180, 90, right? 90. And that's 5,000. I'll cut it in half again, about $40 if I wager 250. Okay. And meanwhile, the idea is I'm not doing too much, but I'm setting alerts and looking for signals so that I can choose the best exit. Now, that's 2 hours, 22 minutes. Now, the 10,000 is nice and ballpark, but we're going to catch the downward tag too, because we'll get an alert on the bull and the bear. You see that? And let's just measure the bear. The bear is 1.86%. All right. 10,000, that's $186. But I'm not going to bet the whole 10. Let's say 5,000. That's, let's say 90. And cut it in half again, 2,500. Let's just say 45 ballpark. So 45 on the way up, 45 on the way down. And if we say 10,000, let's look at the time frame. $100 for doing nothing over a 3 hour and 17-minute time frame. $100 for doing nothing. Now, for some of you, that's not worth it. It sounds complicated already based on just the 11-minute chart. Just the 11-minute chart. You do have volatility in the 5-minute chart in any chart, but you want it to be worth your time. And keep in mind, it's all on you based on how aggressive you are. Right? It's all on you. So this is beautiful to let technology do the work. And this is why I deem the process of having built the software the printing press. The sky becomes the limit. Income becomes replaced. Getting an education in the form of trading and understanding the indicators begins to make sense. But you would have to have seen it before you even started. Now, what happens, people chase money and it's not a true passion of appreciating and understanding the chart and the flow of liquidity or value in and out of an asset. The ups and downs and the volatility becomes a beautiful thing, because I don't need to make 1.8%, or I don't need to make that. I can make far less and manage an account well and I'm all using someone else's money to do it. It's a beautiful thing. 2-step. That way we get flexibility, good management, quality indicators with Pi Cycle Top. And now the sky becomes the limit. But you would have to have seen it from the beginning, right? All right. With that said and done, we're about to set some quality alerts because this is truly discovery, very recent discovery, very recent discovery. And it's one of the most beautiful things on the planet. I always say, whatever your piece is, your educational piece is, you walk into it, you run into it, hits you smack dab in the face. Bam! There it is. If you're blindsided because you're so focused on other things until you cut everything else off, well, you have to deal with the things that you've been focused on. If they're not making money for you or gains for you, or you're not, if you didn't see the vision, you never got the education in the first place. The training videos on YouTube, they're still there. Still there. So this is going to be very interesting. Very interesting. Because it's not my hard-earned money. And like I said, I did that one piece where I made a mistake because I did not know how to use the platform. Now I know how to use the platform, and come to find out, I can long and short. I can get it on the price. I can get the price going up and down. So this is going to become very, very interesting as I am looking soon to successfully manage the account in my two-step process and in time for just in time, alternative cryptocurrency bull run that may kick out as soon as February, March, April, who knows when. But the midterm election's coming up, so Trump's got to do great things by the economy. And definitely by the 4th of July, we should be celebrating something. So this is all beautiful timing. It's just another opportunity of understanding the platform. Sell if the price is going down. Include your stop loss. Buy if the price is going up. Make sure you don't blow your account by having good risk management. Don't bet the whole thing. We're not gambling here. We're using good methodology to manage the account. And what a blessing for those of you who already have the software and know how to use the software. And your $50 can get you 5,000 to trade as long as you fall within the criteria of good risk management. And it's like no rush. The education comes together. You like always say, God's timing is always perfect. Always perfect, right? And you know numbers I can do? Do you know what numbers I can do? And this is eye-opening for myself, my brother in Japan, who's soon to be exiting the military service, and so many other people I've come in contact with, so that in the event of a down economy or super hard times, the skills that pay the bills in the form of technology, the chart is talking to, the chart is singing. It is literally singing. Look at this. Bullish, 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 bullish up through the 15-minute time frame. Something's going up. And we're on the 11-minute time frame. Look, it's rippling through time. That's foundational support. That's rippling through time. And now we got bearish. Will it trickle through time? Just watch that for a minute. It may cancel out and it may come bullish again. But your faster moving charts are more volatile than the calm ocean overall, right? But it canceled out. And sometimes you have other various time frames that are bullish or bearish, but the tags are very beautiful because they come at just the right time. And again, there's other alerts too that you can set. And Pi is just so beautiful. Look at the beautiful run up. And even within the run up, even though Pi is encouraging you to stay in the trade, you got the bear, the bull. Where's another bear? The bear, the bull. The bear will come in soon. And I know on the 10-second time frame, you're like, okay, the 10-second time frame is the same as every other time frame. The chart layout is the chart layout. And I think you guys understand that. You see resistance is greater than support, so you're probably going to go down. When you go down, that can trigger other things too. If it doesn't go down, resistance will fly and be less than support because support will come in. Right now, we can see the market's cooling down in the background. The risk adjusted momentum oscillator pointing down. The stochastic RSI, the green is underneath the red, and so forth. Just a beautiful chart layout. But on higher time frames, the percentages are bigger as long as you're managing the risk. And if the price goes up or down, you should know why. You should be able to explain why the price is going up or down at any given moment in time. I'm just monitoring this to see when the next tag comes in. I see the bull tag. I'm waiting on the bear tag. Beautiful 9 and 21 golden cross. Still bullish on the 1 second, 10 second through the 15-minute time frame. All right, there's a bull, there's a bear tag. See, you travel up through the red and down through the green, up through the negative and down through the positive. You may not travel all the way down it. See, the market's cooling down in the background. Cadence. After blue comes yellow, after yellow comes blue, after blue comes yellow, but will the blue bring in the green? Blue brought in the green. Let's see if it's underneath the blue. It looks like it's underneath. Yep, there's the green. It's beautiful. And you got your tag. This is beautiful. Now, of course, on a different time frame, and it doesn't have to be, because that's a 10-second time frame. It doesn't have to be an 11-minute time frame. It can be a 3-minute time frame. And why a 3-minute time frame? Maybe you want to learn. Maybe you want to try some things out. Maybe you want to see various price points so that you know the amount you want to risk or bet. And for me, bonk is just a volatile mover. So I love operating within bonk. And of course, you don't have to have 200, cryptocurrencies up here, but the leverage is usually built in. I think you get, I don't know if it's 5x leverage on Bitcoin and Ethereum and 3x on the meme coins. I'm not quite sure, but that's what the videos were for that I flashed earlier on Telegram. Really good pieces of information there. All right, not to make this too long, beautiful, beautiful pieces of information. Just beautiful pieces of information here. I'm so excited because the potential is great. 3-minute time frame, 3, 6, 9, 12. Is it 0.5% or better? 0.27%. 10,000 is $27. I'm not going to risk the whole thing. $270 for a 100,000 lot, right? but you're not going to risk the whole thing. Catch it on the way down. Do it again. 12 minutes. Catch it on the way down. 0.4. Beautiful. $40 of a 10,000 a lot, but you're not going to risk the whole thing. $400 of 100,000 lot, you're not going to risk the whole thing. 12 minutes. Catch it going back up. And then when the down come in, maybe down, but you're evaluating things in the market as you go. Easy breezy. Easy breezy. Adjusting for volatility in the market. This is like having insurance on your money. The skill set is the insurance. The risk management of the account is the insurance. Having the skill set is the insurance. And you get so much for so little, which is a blessing. Two-step account. You get so much for so little. That's beautiful right there. I mean, the numbers are beautiful. Because I'll risk this and just manage it well and build it slowly over the weekend and in my spare time, and I'll just build the account. And with the breakoutprop.com, the criteria is very good. I can appreciate what the platform is trying to do. It may not necessarily be perfect, but I love to trade anyway. Everybody has to have a hobby. Some people golf. Some people do sports. Some people exercise. Some people read a good book. Some people have an outlet that's a healthy outlet. And it's addicting. It's like cheating. All right, with that said and done. Disclaimer. I am not a financial advisor, and nothing in this presentation is financial advice. Stocks, bonds, ETFs, ETNs, cryptocurrencies, commodities in general. These things can be highly volatile, but as a trader, you can see that I love the volatility, don't you? If you could lose all of the money you invest, you should always do your own research and consult a qualified licensed professional in dealing with your money. Your investments are ultimately your sole responsibility. And you should know that nothing is ever a guarantee when it comes to investing. A bank could collapse. There could be a liquidity freeze. There could be a break in the financial system. Someone can go to war. There can be an explosion halfway around the world. Or something just really good can happen. And these things can cause markets to drastically flip one way or another. Nothing is ever guaranteed. Neither I nor the platforms containing this presentation for your review are liable for any losses. This video is strictly for entertainment and leaning heavily, as always, toward the educational purposes side only, so that the logic of jumping in and out of trades, challenges of holding your attention into the charts to increase your financial trading IQ even further with the time drills from part 1 of the video presentation all the way up to part 6. And now this beautiful piece is just primed and ready for part 7. You ready? I'm ready. Let's go.